Top 5 Vanguard ETFs, Index Funds, to enhance your retirement portfolio. According to Warren Buffett, a recommended investment strategy is putting 90% of your money in an S&P 500 fund and keeping the remaining amount in short-term government bonds. This approach is ideal for investors who value simplicity and want to invest without constant portfolio analysis. However, the drawback is that it limits your investments to large U.S. companies. To broaden your exposure to other markets while maintaining simplicity, consider investing in a range of Vanguard funds. Numerous ETF or exchange-traded fund and index fund companies exist, but Vanguard stands out as a preferred choice for many investors due to its long-standing commitment to low-cost investing. The company's extremely competitive fees and well-established reputation ensure security for your retirement savings. Founded in 1975 by the pioneer of index funds, John Bogle, Vanguard has become synonymous with reliability and simplicity. While other companies offer similar funds, for the sake of simplicity, we'll focus on Vanguard funds. Vanguard's S&P 500 FUD. Vanguard's S&P 500 ETF takes the lead as the first and most popular fund. The S&P 500 comprises 500 of the largest U.S. companies and is widely considered a reliable indicator of the overall market's performance. When people mention the market, they typically refer to the S&P 500 index. In order to be selected for this index, a stock must meet specific criteria, being a U.S. company, having a market cap of $5.3 billion or more, reporting positive earnings for the past 4 quarters, and trading at a reasonable share price. These factors contribute to Warren Buffett's recommendation of this fund to most investors. Notable names included in the fund are Apple, Microsoft, Exxon, and Johnson & Johnson. With a mere 0.03% expense ratio, it stands as one of the top funds for investment. Vanguard High Dividend Yield, VYM, is an ETF with a focus on high dividend yields, primarily investing in companies known for consistent dividend payouts. The fund trades stocks with relatively low risk and has a composition of 425 mainly large U.S. companies. The 3 largest sectors are consumer goods, financial services, and healthcare, leading to slightly slower growth compared to the overall market. It's an excellent choice for retirees who can rely on their dividend payments without the need to sell investments for income. Some prominent holdings in the fund include Verizon, Chevron, and AT&T, with a 0.06% expense ratio, just slightly higher than the S&P 500 ETF. Vanguard Total Stock Market ETF VTI is designed to replicate the performance of the entire stock market, not just focusing on large companies like the S&P 500 though. It holds shares of over 3,600 diverse companies, spanning from small to large enterprises. VTI's broad investment approach allows it to capture returns from a wide range of companies of varying sizes. In addition to the country's largest players, VTI's top 10 holdings include Alphabet, Apple, and J.P. Morgan Chase. The fund's 3 largest sectors are technology, financial, and healthcare. With an exceptionally low expense ratio of just 0.04% annually, VTI offers a cost-effective investment option. Vanguard Growth ETF FUD primarily focuses on investing in companies that demonstrate capital growth potential. It comprises approximately 300 different stocks, including large-cap giants like Apple, Amazon, Facebook, and Google. As it shares in the profits of such high-growth companies, VUG tends to be more volatile, subject to market fluctuations, and thus more appealing to younger investors with a higher risk tolerance. The fund's single largest sector is technology, followed by consumer services and industrials. VUG offers a well-balanced investment option for those who are comfortable taking on slightly higher risk. Its expense ratio stands at 0.04%. Making it comparable to other Vanguard funds and a highly cost-effective choice. Vanguard Total World Stock Fund VT offers an excellent opportunity to invest in global stocks encompassing both U.S. and foreign companies. With ownership of shares in over 8,000 diverse companies, ranging from micro to large cap, the majority of the fund comprises U.S. stocks. It provides a well-rounded exposure to global markets, holding prominent companies like Facebook, Berkshire Hathaway, and Exxon for investors seeking to diversify their portfolios beyond the U.S. market. VT is a compelling choice. Despite a slightly higher expense ratio of 0.09% compared to the previously mentioned funds, it remains reasonably priced and offers a well-balanced investment avenue. These Vanguard funds serve as a mere glimpse into the company's extensive offerings, providing an excellent combination to diversify your portfolio effectively. The most affordable fund among them charges only $300 on a $1 million investment, while the most expensive comes at $900, making them highly cost-effective, particularly when compared to actively managed mutual funds. For more details about these funds or other options from Vanguard, you can find abundant information on their website. Investors have the convenience of trading Vanguard ETFs like stocks in a brokerage account, enabling them to establish a well-balanced and promising portfolio for their future.